welcome to another edition of Business on Course with me from Fire Capital is Chaudhry. Thanks very much for being with us on the show. We of course are right in the heart of Manesar to try and play some golf because it's been quite a cold morning. What has it been like for Fire Capital to move on to the big real estate story? It's now time for your second real estate fund, isn't it?
It is. First of all, thanks for having me here. Lovely day, like you said, and particularly so being a weekday.
That's
right. It's not often that you get to be out on the course on a weekday in such lovely company. So thanks for that. And yes, really interesting times. We started off about two and a half years ago with our first fund, and that was a little bit of a challenge as it was one of its first. Fire, as you probably know, is first Indian real estate capital fund. And in 2004, when SEBI first allowed private equity funds to be set up, we were first off the blocks and got going with the first fund of its kind. That was challenging because it wasn't an institution trying to set something up. It was an individual, a group of individuals trying to build an institution in a sector which wasn't known for its professionalism. It wasn't known for its organized nature, and first of its kind private equity fund, so that was challenging.
But you closed a $250 million fund already, right? And you're coming up with a new one.
The first fund was a $121 million fund. With co-investment, we could invest up to $250 million out of that fund. And we had very large institutional investors participate in that one.
And then entry into this new, fresh, vibrant market which has listed players like DLF, Parsavnath and everyone. Obviously, the next fund will have to cater for a broader base, right?
The industry's evolved, and very quickly. It's pretty much like what happened with telecom. 10 years ago, you would have to wait 10 years to get a connection and see where we've reached today. So you're very right. Real estate is probably going to ape what telecom did in terms of the speed of change. So there's lots that has happened. You're right. Big institutional players now with capital from all over the world coming in, listings, which has deepened the pockets of the bigger real estate developers in India. So in that context, obviously, we have a lot more to deal with as we get into our second fund.
We're going to talk more about his fund, but in just a bit. We're giving some group of people a pass and we'll hop across on the other side of the course. We were talking a whole lot of money short while back about Fire Capital, real estate and everything. When did you start playing golf?
What actually got me interested in golf was about 8-10 years ago. There was this golf resort in Kathmandu. I used to work with a company called Feedback Ventures. And Feedback had this feasibility study that they were asked to carry out for a golf course in Kathmandu. And this was an erstwhile game sanctuary, very interesting project, but had no prior interaction with the game as such. So that's when we first started getting interested. But yes, the last year or so, as Fire is beginning to look at investing in real estate projects which are golf course centric, there's a business reason to getting closer to the course.
What's the logic in investing in golf course linked real estate?
See, there's a lot, as one looks at India, there's obviously great demand in the middle and the lower middle segments. But equally interesting is the upper middle segment, and more than the upper middle segment, there is the inspirational aspect and the aspirational aspect that this game kind of brings out in people. So what we're looking at as people move towards better lifestyle, we are looking at concepts like golf residences, villas and apartments.
But I find it, I'm just wondering if there is some sort of dichotomy. If you're looking at smaller players who are coming up in tier 2 towns, for example, the chance of people playing golf there is going to still be a long shot than what it is in cities like Delhi. For example, a couple of kilometers down, you'll find about 4 or 5 real estate developers setting up these luxury villas around golf courses. So how does your theory about going with smaller developers to scale them up work with what's already established?
See, that actually is very interesting. this whole concept of tier 2 not being cutting edge in terms of what the needs and the desires of people in those cities are. If you look at the amount they travel overseas, there are more people traveling out of the mini metros and the emerging cities overseas on holiday than in the metros put together. So they are, and cities like Jaipur, where we've made investments, outskirts of Bangalore. Bangalore obviously is more
golf savvy right now.
Golf savvy than other cities. But even cities like Indore, which don't have a good golf course currently, there is, people will catch on. This whole thing will catch on if there is a golf course there. It's just that most of these cities there is very little, in terms of the supply side of it. There are no golf courses, or at best 1 or 2 army courses where other people don't get to play.
So there's a little mix of business and pleasure when you got into golf yourself.
Yeah.
In terms of the whole real estate space, since we're talking about it, and we are indeed at a golf course, which some would say is a fairly valuable piece of land, how would you really perceive what's happening in the pricing? And since you do invest with smaller companies that have potential to grow, what is the potential you really see when prices are already so high?
What we are basically looking at is creating value, and that can be done if you start at a reasonable price point as regards the land, because that's the raw material you start working with. And you're right, the price points at the current moment are such that most developers and most developments are naturally getting pushed towards the higher end, because your cost structures are high, you need to sell at a higher point. But what we are looking at doing is working backwards to say, where can we go and what land can we get, what kind of a development partner can we get who understands that we're targeting real demand in the middle and the upper middle segments, and there's a price point attached to that. You need to work backwards from that.
Okay, we're going to take our next shot and catch you a little ahead on the fairway.
That's a good shot, Shelley.
We're going to take a break on that good shot, come back in a moment, and that's on Business on Course. Nice. Welcome back. You're on Business on Course. Thanks so much for staying with us through the show.
Pleasure.
Now we should talk about your new fund. What kind of money do you hope to raise? We're all hearing $500 million odd.
Yes, that's what we're looking to raise. Since we were making a jump from 121 million committed capital to 500, we were a little constrained by how much that quantum could possibly be in terms of the jump. But in terms of the team that we have, something that I'm personally most excited about is the fact that Fire Capital, when we started, was a bunch of 3. We're now up to 30. Okay. So we have a great team. And in terms of the demand, the marketplace is not going to impose any constraints in terms of how much can gainfully be deployed. Right. So we're excited about that. And so it's going to be a play between how much we can put to work and what can the markets kind of absorb the...
But you've been seeing so many regulatory changes around real estate right now. One, of course, is this whole real estate, REITs. Okay, that's one. The other is the kind of projects that are coming around. Yeah. We weren't even thinking about, redevelopment and rehabilitation of projects like Dharavi, which are one of the most prestigious projects right now. So based on some of these changes that are happening, how will your strategy alter?
When we started, we knew that, the industry is going to evolve very quickly. For us at Fire Capital also, the vision is to move beyond private equity fund management into REITs and other areas of managing capital in real estate.
Okay, so for example, you said REITs. Now, what's your thinking, what's the line of thinking in terms of timeline, investments, and the whole idea of how to put it together?
We expect to move into that space some time from now. There will be other players who've done this in other markets in the past who will come in and be the first movers. Exactly. and we've been the first movers in private equity, and we want to kind of get a hold there, and then move into other areas.
We'll talk about that and much more on this particular edition. Stay with us. We're going to take our next shot and catch you ahead. Not at all. What a poor lift. But like I always say, good shots shouldn't be a consistent thing, because you forget how to accept the bad ones. What has been that little trough or patch of rough when you actually moved into Fire Capital? What were the struggle times?
What I was doing earlier, I was, like I mentioned, a partner at Feedback Ventures, which was doing a lot of work in the real estate space. And one saw from close quarters what kind of potential existed if one could invest capital along with thought leadership. So that was the turning point in terms of, and especially 2004, when private equity funds were allowed to be set up. That was the time when it occurred to me that it makes sense to now move on and actually add on to the development management capability that one had kind of built up at Feedback Ventures with capital infusion.
But some of your investments, I mean the ones that we've so far been talking about, mid-market investments, small town investments, are you also working on the model of listing them eventually?
We have, for example, in Indore, which is our first investment, which at this point is most advanced in terms of development. We have a group there called the M. Zaveri Group, Mukesh Zaveri, who's been doing real estate developments in Indore for a while. In Jaipur, we have a group called the Grassfield Group, where we have people like Sunil Bansal, Vimal Singhvi, Atmaram Gupta. So that's the clutch that we're dealing with in Chennai, a group called the Om Shakti group, Mr. Ramchandran there.
So I mean, these are not things that make it difficult for you to do scaled up work, do they? I mean, the fact that they are players who have limited clout within real estate right now.
Actually, it helps because
you have more say.
No, we have equal say. We like to carry our partners with us, but real estate is a very, very localized industry. Even the unit of measurement of land is different in different states. Yeah. The biga, when you convert it into number of square yards per biga, could be different if you're in UP or you're in Haryana or in Rajasthan. Now, that is just one example of how localized this whole business is. Getting the land, getting approvals, understanding the local nuances in terms of what the market wants in a particular city. Okay. The same 2-bedroom apartment in Mumbai would not sell in Indore or would not sell in Delhi. So all of that local knowledge is something that we seek in our partners.
And since you're so well entrenched into it yourself, you guys are pretty much on board seeing it closely.
That's correct. That's correct.
We of course have walked a little further than our cart. We're going to go get it back and catch you ahead after this short commercial break. Welcome back. You're on Business on Course. Thanks for staying with us through that commercial break. What's making you tick about the future of real estate right now?
The future is it could boggle your mind if you actually look into each of the components that kind of comprise real estate as we talk about it and paint it with a broad brush. Just commercial alone is 150 million square feet of office space. And these numbers, Shelley, if you just hear them, it's very difficult to relate to them, but 150 million square feet of office space, in layman's terms, could be the central business district of Connaught Place in Delhi. You're basically looking at 50 of those.
But what I don't understand
that's the scale that we're looking at.
That while everybody talks about the scale, a lot of people who are the critics or who want to sit back and think about this in a more realistic way in their own assessment say that this is euphoric. Now, what makes you think that it's not?
It is euphoric when you look at some pockets where there is a lot of overheating, because what people have done is they have said this 150 million square feet that I'm talking about is demand, say, till 2012. Now, what a lot of
But
people
isn't
are
this
doing.
demand factored in? Haven't the clients been fixed?
Yes, the demands, what is happening, if you take a more analytical view of what's going on, a lot of what is going to happen in the future is getting discounted today.
Yeah.
So
it's all priced in. It's sold
yes,
for.
It's sold for. It's priced in. You're right. But at the same time, it's not right to paint it all with one broad brush, because we're looking at just the the emerging cities. If you're looking at tier 2 or tier 3, you're looking at about 50 cities which will become million population cities in the next, say, 5 or 10 years.
And those are the cities the new fund is going to look at.
That's exactly what we're looking at. And if you look at those cities, those are not hyped. Not every city is a Gurgaon or a Pune or a Mumbai. And those are, yes, if you took a drive around Gurgaon, not far from where we are, you'll see a lot of supply, and not all of it is occupied.
Exactly, because the question is that malls these days are converting themselves into office space because they can't sell enough to shopkeepers. Footfalls are not converting into revenues, and the amount of office space that's being set up at the end of the day, at least even now in metros, except in very prime locations, is not getting occupied enough.
It is, and see, and the reason for that is the fact that when you look, you talked about retailing. If you look at the amount of organized retailing that the country sees today, and if you were to compare it with, say, forget a developed economy, if you just look at another developing economy, you would say we need to double or triple every year, to get to the right penetration levels in terms of organized retailing. But that is not going to happen overnight. So when you work top down, you get very excited, and your numbers tell you that you need so much space, and suddenly everyone's rushed in what the Wall Street Journal calls the mall mile. One stretch of road in Gurgaon with 17 malls. Now that's not happening, because worldwide there are a lot of malls, but they do their own hinterland analysis to say, okay, this is the hinterland that I will service, and therefore I build a mall, and the next one is further out, etc., etc. Now here what has happened is there's so much concentration, and retailers, you can't have one store in every mall.
So there is clearly a need for some amount of
rationalization, yes.
in place. Okay.
There's a lot of exuberance, rightfully so, because for an economy that's growing at 10%, you expect, rightfully so, real estate to grow at 20 to 25%. It's like 2.5 times the rate of the GDP growth.
It's not.
It is growing. It is growing. It will continue to grow. But sometimes, what's happening is there's so much supply in a particular pocket that, there's oversupply there.
And the prices are then therefore poorly averaged.
That's correct.
Okay.
That's correct.
Let's take our next shots. So we're pretty much at the end of this show with the whole idea that Fire Capital is looking to do better mega deals here on. But I do want to ask you, at some stage, would you even consider going beyond real estate?
Yes, very much. If you look at what India needs today, the economy needs that. There's a lot of hidden entrepreneurship that needs to be uncovered. And we see a lot of that potential outside of real estate. We've played a very, very active role in the real estate space, partnering people, incubating ventures. Right. And that skill is something that we think we can very easily replicate into other sectors. We're doing stuff in healthcare. In each of our townships, there are hospitals. There's a lot of opportunity in the food service business, organized restaurants and that space. Medical tourism is going to be big in the next, say, 5 to 10 years. That's another space that we are very excited about. We're looking at hospitality. Each of our townships, we have a 5-star or a 3-star hotel, depending on which market we are in. So those are, again, businesses that we want to take beyond and give them a life of their own. So in future,
the options are many.
Yes.
And you are actively considering that.
We could have separate funds for each of these. Logistics is, again, a sector that we are very, very excited about. Okay. So these are areas that we will expand the Fire Capital platform.
In this whole time that you've actually tried to establish your business and so on, what has golf meant to you in this entire process?
See, there's a lot, when one started thinking of golf for the first time, it was like, it's a nice walk, disturbed, that was the kind of impression one had of golf. But, if you were to actually see what kind of lessons you learn, it's like the one stroke at a time. There's a lot, we don't see at this point too much business getting done on the golf course, but like any other sport, golf teaches you quite a lot, and that's something that we're looking to bring into our business lives and get the team involved. And
sometimes golf can also be the cue as to where they should be investing next. Thanks very much for joining us.
It was a pleasure being on the show.